Core Scientific stock up 200% this year. And it seems to be this larger trend that a lot of the Bitcoin miners who have diversified into AI and HPC clients are just outperforming the pure play Bitcoin miners. Talk to me about this change in strategy for the company.
Yeah, so it's something that we've been setting up as a company dating back to our founding back in 2017. So our facilities were developed to be multi-use for not only just Bitcoin mining, but also for the transition that we're doing right now to high performance computing. And so this trend is much broader for the entire industry. So you've seen a number of Bitcoin mining companies announce similar type strategy shifts for the business. And it's really about the next 3 years in terms of where the opportunity set truly lies to capture a large portion of the data center market, because we're in the largest trend in data center history. So every big data center company that exists carved out a niche. It just so happens that the niche that Bitcoin miners are carving out now are in the largest niche that has ever been found in the data center industry.
And in terms of the clients that you're working with, we've spoken about the $6.7 billion deal that you have with CoreWeave, a company that's backed by NVIDIA. Where else are you seeing appetite in terms of this new AI HPC customer that you're serving?
Yeah, it's not just CoreWeave that's building out large models. So you think about Microsoft, OpenAI, Amazon, Google, all of these companies are doing significant amounts of investments into this GPU cloud. So it's AI is really fueling the new cloud business, which is the GPU cloud.
And is this where your company is going? I mean, you said that it was always a part, like a fixture of a larger business plan when you launched in 2017. But a lot of people thought of Core in the same breath as being a Bitcoin miner. And it seems like you're really straying away from that. So is it more about becoming AI HPC exclusively, since that appears to be working?
Yeah, we're a digital infrastructure company at heart. So the 800 megawatts that we've been operating, it's allowed us to be the largest Bitcoin mining company for the last 3 years. And now it's allowing us to make this transition into the high performance computing market. So it's a natural transition for the business. And our team is really just a data center company at heart. So that's really where our skill set lies. So attacking this new vertical is very easy for us to handle.
So you guys were the largest Bitcoin miner through bankruptcy as well?
We were, yeah.
Okay. And so I would like to point out, like, you're somewhat new to the company. When did you start?
Started April of 2023.
Okay, so you've been really helping the company navigate its way out of bankruptcy. What are next steps? What do the next few months look like this year in terms of your strategy for Core?
Yeah, so we've outlined our catalyst through the remainder of this year, which is really about identifying and acquiring new sites and then diversifying our client base. So given this is a new business model for the company, we signed our first deal about just under 100 days ago. And it's about finding a more diversified, larger client base so that we can continue to grow and to become one of the largest data center companies in North America.
Which AI clients are you going after?
Some of the largest ones out there.
Any that you can share today?
Not today.
Now, one thing that I want to understand, because I've spent so much time talking to Bitcoin miners, and one of the value propositions that they offer is that, yes, we're using grid power, but we're able to help stabilize a grid, because if you have too many renewables that you're onboarding and you don't have consistent demand for that, we can kind of toggle down that demand when more people need power. Shift it back up overnight when there's just less, need for households to consume electricity. But as you move into serving these AI HPC clients, I would imagine that you can't have that kind of flexible demand buying. So, how has that changed your thought process around the value add that you bring to a grid in a given state that you operate in, whether it's Texas or elsewhere?
Yeah, so our initial locations were all in places that had low cost abundant power. So it wasn't just the renewable aspect to it as well. So we were hyper-focused on finding locations and geographies that were really underserved communities, because that is a place where they used to have significant industrial and manufacturing, but all of that business has left the United States. And so locating at those locations provided us a significant opportunity to grab a large amount of megawatts. And on the Bitcoin mining side, we're still pursuing some acquisitions on the Bitcoin mining side, which mainly targets locations where there's a significant amount of renewables, a significant amount of volatility on the grid. And that's something that Bitcoin miners have been able to solve in local communities, where they can help stabilize power prices and also allow new renewable projects to come online.
Well, across AI, across Bitcoin, there is this universal need for more electricity. That's something that you've been talking with the former president, now GOP, presidential nominee Donald Trump about. It's my understanding you were in closed-door meetings with him in Nashville and in Mar-a-Lago, and it seems like one part of his presidential platform that he's been, very strong on is the need for greater, in terms of his energy policy, build out infrastructure, generate more electricity at home to support the AI boom that's happening here, to make this the destination for a lot of the companies that are building out infrastructure to support this growing industry. How do you feel about a potential President Donald Trump coming into office and what that might mean for the work that you're doing at Core?
Yeah, so he's been very forward about his thoughts on energy dominance and further energy generation development, which is obviously important not only to our industry, but industrial manufacturing broadly speaking. And it was great to hear last night in the debate, Harris also said she wanted America to be a leader in artificial intelligence. And so both parties right now have kind of centered around being a forefront leader in artificial intelligence, which is going to require a forward-thinking process on energy policy. And so that's something that we think is very bullish overall for the industry. And it's going to be great tailwinds if either administration comes in right now and provides a significant tailwind to the energy policy in the United States.
Some people within the crypto industry in particular are concerned about Vice President Kamala Harris potentially taking over. If she were to win, there is the worry appears to be that SEC Chair Gensler would remain in place, and that a lot of the policies that we've seen under President Joe Biden would persist, that perhaps we wouldn't get the kinds of rules, we meaning what the industry is saying, wouldn't get the kinds of rules that would better police the space in the US. Are you at all, do you share that sentiment? Have you been having conversations behind the scenes with people about what a Harris administration might look like for the crypto industry in particular?
Yeah, we haven't heard too much out of the Harris party yet in terms of what actually their policies are going to be. I think we have a good tailwind here, though, from some of the policies that or some of the broad speaking points that she's had around crypto, especially crypto for Harris. There's been a number of different groups that have come out in terms of supporting Kamala. And so our hope is that there's enough voices that are close to her that are feeding her the correct information about Bitcoin and crypto more broadly, that there's not going to be a significant political risk to Bitcoin in the near term. But I think over the long term, we'll be just fine no matter who comes into office.
Okay, so in terms of the Bitcoin mining side of your business, the industry more broadly hit an all-time high network hash rate. It also, last month, it was the least profitable that it's been, or we saw the profitability of mining plummet from the month before. It seems that September is trending in that same direction. At the same time, you have the block reward go down during the halving in April. So it's just so many different things are happening right now. And help me parse through, because I think that part of why I'm having trouble digesting all of this is because, in a sense, it's a good thing for the network hash rate to be an all-time high. It would seem that you've got a robust network that's protected by a lot of people, many different players coming online in order to secure the network. So isn't that a good thing?
Network security is at an all-time high. That is correct. But what we've seen post the halving, where we expected a significant amount of hash rate to come offline, we haven't really seen that occur. We've actually seen more hash rate come online ever since. So you actually saw a number of public companies have negative gross margins on their Bitcoin mining business in Q2, and Q3 is shaping up to be a much more challenging quarter than Q2. And so I would expect to see more challenged business models, more companies begin to sell themselves to larger entities who are looking to aggregate more companies and just gather more hash rate. Because hash rate growth has been completely outpacing the expectations of the broader industry. And so the large public companies who want to maintain a certain percentage of the overall network need to make acquisitions to acquire all of that hash rate to bring it in-house much more quickly.
And we're seeing that kind of M&A action.
Yeah.
CoreWeave's tried to buy you a couple of times, it seems like. How are you thinking about deal activity for Core Scientific? Are you looking at people to buy? Are you interested in being bought? What are next steps for you guys on that front?
Yeah, right now we're mainly focused on looking at acquisitions in the data center space. And so that's where our focus is. We want to continue to grow that part of the revenue mix of the business. And we obviously have one of the largest footprint build-outs over the next 2 years, even when you compare us to some of the largest data center companies out there. And so finding the right types of acquisitions for us is incredibly important, and we think that really fits well in the data center industry right now.
Last question. Are you concerned about the Bitcoin mining business? That's one part of what you do, but as you said, it seems like the company's really been diversifying into other areas, like focusing on HPC and AI clients. For the pure play Bitcoin miners, the people who you said aren't coming offline, if anything, they're doubling down, joining the network since the halving, even though it's less lucrative to do so. Is this is it a dying industry? Is it something where you're just going to keep seeing M&A and it come down to a handful of players, or what happens next?
First, I think the acquisitions in this industry and the mergers that are occurring are healthy for the industry. I think we had 27 public Bitcoin mining companies just in North America alone. So there's going to be consolidation, especially as the network continues to grow. Outside of the United States, it's actually distributing very well in terms of a lot more smaller sites, a lot more smaller companies. But Bitcoin mining is always about one thing, which is time and market. Can you survive during the down cycles to survive for those 3 to 4 months every single year where economics are completely outpaced due to Bitcoin price outpacing network hash rate growth? And right now, we might be in a bit of a down cycle, but that just means you have to figure out a way to survive until we get back to an up cycle, because there's 9 months a year where we're essentially flat on margins, 3 months to 4 months a year where things are very, very challenged, and 3 to 4 months a year where things are very strong. And so it's all about playing to get to that next point in the market cycle, which I think a number of Bitcoin mining companies are trying to set up now.
And just really quick on that last point you were making, typically we see the price run up come after the halving. Mm-hmm. It was different this year, and a lot of people believe that just had to do with the tens of billions of dollars that were flowing into the spot Bitcoin ETFs that just launched in January. But we're not really seeing the price bounce after the halving.
Yeah, we haven't seen much. The expectation would be, if you look at the previous halvings, we should be around $250,000 Bitcoin price about 12 months post-halving, but it doesn't look like we're trending there right now.
Do you think we will?
I hope so.